it's time to get ready to buy some gold. You know, I think the precious metal represents one of the greatest long-term themes out there right now. Always want you to be diversified into it. However, I said January would be a terrible month for gold. You heard that many times, and you had to wait until February to buy. Well, that's exactly what it was, a terrible, horrible, no good, very bad month of January. But now February's arrived. And with today's huge gold rally up $18, I think the bottom in gold has come with it. I'm not just saying that because it's today's action, or because we got a big gold mining takeover with Newmont Mining acquiring Frontier Gold for a hefty premium, sending the stock up 39% today. Man, do I wish I'd recommended owning that one. Beyond that, the charts are screaming that the bottom in gold has arrived, or at least that's the interpretation of Tim Collins, a brilliant technician and my colleague at TheStreet.com. This is a pretty big deal because gold traders, like many commodities players, tend to be avid chart watchers. They take their cue from the technicals. And according to Collins, who had been cautious on gold for several weeks, the technicals have finally turned bullish. I want you to take a look at the daily chart of the GLD. That's that ETF that tracks the price of gold very closely. I always like say yes to buying that. We can see what Collins sees here. Back on January 24th, okay? See the breakdown? Gold dropped through an important support level at $131. In other words, it fell through the floor. Boom. Okay? Just got hammered on the way down. Really ugly. But, and this is something that many traders miss, the GLD stopped falling at the secondary support level at 128. So, in other words, it held that one, okay? For 2 days, it failed to break through. All right, and it was on very heavy volume, so it's for real, okay? And now it's come bouncing right back. Last night, Collins told me that if the GLD broke out above its ceiling of resistance at 131, he thinks we could see a quick $5 to $7 move higher. That's a $50 to $70 move in the price of gold, the physical. Sure enough, the GLD did break through, okay? It broke through today, and I got to tell you something. That means it should be smooth sailing from here. All right, let's take a look at the weekly chart. Collins thinks this also paints a very bullish picture. You see these lines where the GLD has pulled back in the past? All these different things, they're called bullish flag patterns. And Collins believes we're getting the same setup now that triggered rallies in August of 2009, then again in February, and then last August. These flags really did flag something. The charts say gold is bottom, and I agree with them. If you look at the gold stocks, they peaked about 1 month before gold prices collapsed in January. Well, now all those charts have stabilized. Today was liftoff, which to me says the metal itself will stabilize. In fact, I think they're forecasting big gains because you simply cannot find enough of the stuff anywhere. That's why Newmont was willing to pay so much for another gold miner that's really a development stage company. You know all the reasons I like gold long-term. Insurance against inflation and economic chaos, currency that retains its value with governments around the world printing money like mad, plus tremendous demand for the stuff, especially from India and China. The bottom in gold is here. I think it's time to buy. Stay with Cramer.